presentation is visible, right?
Yes, sir.
Yes, it is visible. Rohan, please go live.
Yes, sir. We are live, sir.
Good afternoon, participant, and sorry for the delay. There was some problem from my end. So basically, the session we would be basically talking about the fundamentals of finance, taxation, and budgeting. Now, when we talk about finance, taxation, and budgeting, each of those concepts are quite, they can be discussed well in detail, but the discussion or the agenda here is to basically give you a fair understanding of what each of these topics are into. Now, finance, like to understand something which makes finance and breaks finance is the people. We, the people, actually contribute towards the finance, but the finance is the one which actually makes and breaks an enterprise. Now, when we talk about finance, we're just not talking about corporate finance. We can also talk about personal finance and government finance, but these topics are completely outside our purview. So let's stick to only the perspective of a corporate finance and think about what do we have under corporate finance. A corporate finance basically deals with your budgeting, which is the most important, because you go to a particular fundraise or for a particular loan, the first thing that you would ask is, how much do I need? Let's say I start a factory, how much do I need to actually start the factory? There should be a land lease, there has to be factory shed, there has to be equipment which should be leased out. There are certain times that you need at least 6 months to set up the factory. There are certain operating expenses which incur in the first 6 months. Now, all these costs have to be budgeted, and you first prepare a sheet of budget and estimate what could be the amount that I would require until my operations are live or until my commercial operations begin. So, until and unless we understand the concept of budgeting, we will not be able to even start doing a particular business. So that is how essential finance is, because finance is something which will be starting the business, and even through the end of the business, we require this particular function to actually do the handholding together with the other aspects of the business. So let's first look at what are the types of activities that we have under finance. The first thing that I told you about is about corporate finance. So when we talk about finance, there is corporate finance, personal finance, and government finance. But actually, finance is into budgeting, investing, borrowing, lending, saving, and forecasting. Now, forecasting is a measure which can be used for multiple reasons. Your investment decisions are based on forecasting. Your borrowings are also based on forecasting. But at the same time, don't forget that apart from raising capital, forecasting is very important to know where our business is going to. Now, today we have done about 100 crore turnover. I want to definitely make my turnover touch 200 crores in the next 2 years. Now, that is my goal. So, a forecasting has to be done on what should be the proper steps that will make us achieve that particular goal. So, I am only talking about the corporate finance, and as far as the corporate finance is concerned, there are multiple elements under corporate finance which help you in decision-making process. Corporate finance is all about decision-making. The personal finance and government finance, I'm just leaving it aside and moving into corporate finance part. Now, when we talk about corporate finance, it is anything to do with raising money or utilizing money. You raise money and you create an enterprise. That is all that is related into corporate finance. So you raise capital in how many ways? I can raise capital through diluting my equity or by giving them some shares. Second one is through banks or VC, venture capital debts. They give me something called as debt funds. The third one, most important one, very, very prevalent today is your Garmin Grants and others. Today there is a Startup India scheme which is giving you at least a grant of 15 to 20 lakhs and also giving you your compulsory debentures, convertible debentures which are going up to 1 crore rupee. So these are new schemes which are rolled out by the government and have been very essential today in our entrepreneurship building. There are so many companies which have actually availed these kind of grants and these kind of bonds in making sure that their initial capital is being adjusted for. Owner's equity in simple sense is you are a promoter, you know what your budgeting requirements are, you start investing at least a small part. A debt fund will only come in if the owner has already invested a certain amount as equity. Let's say you go to a bank and you tell him that, sir, I have a project and this project requires an initial capital of 5 crores. You think the bank is going to give you the entire 5 crores as loan? Absolutely no. The government says, where is my margin money? That means I say out of the 5 crore, 80% the banker will fund, but at least 20% the owner has to bring in as his contribution towards the capital. So that is owner's equity of 1 crore. So 1 crore of owner's equity together with debt funds of 4 crores makes it a total package of 5 crores, which is sufficient for me to finance or for the construction of my new factory building, and that is where the entire corporate finance starts. It starts with sourcing of funds and it goes into operations. Now when you talk about operations, that is decision making becomes an essential element of corporate finance. I'm not saying corporate finance makes decisions, but corporate finance enables the decision makers with sufficient information and credible information through which they can make timely decisions. Your timely decisions are very essential for the survival and growth of a particular enterprise. So when you talk about decisions, it is about decisions relating to your finance. Should I raise further capital? Or should I close my existing capital with the money which I've generated into my operation? My investment decision. Should I take the surplus funds and invest into another company or expand my factory premises? Or should I expand my product offerings? All these are my investment decisions. Your dividend decisions. That means all those people who have contributed my capital, I want to give them return in the form of a dividend. This decision also forms part of corporate finance. And finally, what is your working capital decision? The working capital today has become very an essential and an integral part, especially during the COVID lockdown. You found that a lot of companies have suffered because of lack of working capital. When there was a 3-month lockdown, there was continuous running operating expenditure, but they didn't have sufficient revenue to be there. So if I had 3 months of working capital expenditure already kept in my bank account, I would have only been sufficient to survive for 3 months. What about the 4th month? If the unlock wouldn't have happened in the 4th month, then ultimately you are trying to push your company into a failure. That is the reason why corporate finance will provide proper decision-making necessary documents. We are not here to make decisions, but we will empower the management in a timely manner by providing reliable information, a reliable and a relevant information based on which the management will be in a position to make decisions. But at the same time, the management also requires to understand what the financial statements are actually providing, what corporate finance is actually making. So there is a particular MIS, let's say, I give you an MIS like this, a management information system like this. Last month, the revenue was 100 crores. Current month, the revenue is 114 crores. A 14% upward increase. Then you start saying that, wow, fantastic, I might have done really well. Then last year, in the same month, I've done 150 crores. Now what is your expression? When you compare it to your last month, you're saying 14% increase is fantastic. But last year, during the same time, I had a turnover of 150 crore, but today you're only there at 114 crores. That means your turnover has dipped by 36 crores, or in essence, more than by 22%. So that means just by a single metric, it is not possible for us to evaluate the performance of the company. If you can't evaluate the performance of the company, then how will you make decisions regarding the company? So there are certain tools which we engage in corporate finance, which will help you explain or evaluate the performance of the company. These are particularly into ratios. Now what are the ratios? Ratios are or percentages as simple as that is the example which I gave you. Last month to current month, I have increased by 14%, but corresponding last year, the same month, if I compare with the current month, then I have declined by 30% plus. So these are metrics, these are certain tools which will help you in evaluating whether the company is progressing in the right direction or not. The tools of evaluation always look at the ratio segment. The ratio segment, either presented in the form of ratios or sometimes in the form of percentages, are very essential in actually evaluating the performance of the company. These ratios are predominantly into four categories. One is the liquidity ratio. A liquidity ratio will help you explain what is the working capital requirement of the company. Let's say my receivables, my customers are not paying me, within time. My credit limit is actually exceeding what I am capable of doing. Then what happens? Your liquidity ratios will show an adverse number, which is an alarm for you saying that your working capital requirements are insufficient. Either you start requesting your customers to pay, or you go to the banker asking him to enhance your working capital limits. This is decision making. Now, either you want to request your customers or you want to request the banker, that is a decision that you make. But as financial evaluation, I can give you information, or we give you information on explaining that your liquidity ratios are showing an adverse trend. Same way, we have something called as financial coverage ratio. A financial coverage ratio is nothing but, in simple sense, what is your capital structure? My owner's equity is 20%, my debt is 80%. Remember, a debt is always a cheaper source of fund than equity, because a debt comes at 12% or 14%, but owner's equity, since he's a risk taker, they always expect a higher rate of return. Because a banker will always look at recovering the amount of loan rather than looking at enhancing their returns. But look at owner's equity, there's always a greed factor which comes in. So I am not satisfied with 12% or 14%. I expect to get at least 20%, 30%, 40% on the amount of money which I have already invested. These ratios are covered under financial leverage ratios. Let's say my debt coverage is not even 1 time to my particular profit. When I am not even able to cover my debt, then that means it's an alarming situation. That means you will not be left out with sufficient capital to repay your loans or the borrowings. That is a fundamental reason why you need to evaluate your financial coverage ratios. Your interest coverage ratio, debt service ratio, all these are clear-cut examples of how coverage ratios are very important in evaluating the performance of a company. Then comes the turnover ratios. Like I just gave you the example. Last month to current month, I have a 14% increase. Last year, corresponding the same month, I have a 33% decrease. Now, it always gives you an insight into how the company is actually progressing. And it enables you to take a decision to make sure that the company is moving in the right direction. So either you want to take a certain decision, like including new products or increasing the marketing spend so that the sales will start boosting up. That is a decision which the management has to take. But the financial ratios, which are an essential tool for evaluation of company's performance, are being taken as a basis in trying to explain whether the company has to move forward in a particular direction or not. Clear? Now, when we talk about operational profitabilities, these are very essential. There are a lot of companies today which are not running at operational profits as well. Now, operational profit in the sense, at least your cost of operations should be recovered from the sales. Now, essentially companies which are in the growth phase or which claim to be in the growth phase, they are still fine if the operating expenditure is not recovered. Take for example, I don't know how many of you use an app called as Cred. The Cred app is actually spending 6,000 rupees per acquiring one customer, which was earlier almost 50,000 rupees. Now, if you look at the kind of spend that they are doing, it is not operationally viable because operationally the company is not generating sufficient amount of revenue. But in a sense, the longer vision of the company is much different. Look at Reliance Jio. I think it was a fantastic example. In the initial 1 year, they didn't even have a charge on the customer. The SIM card was free, the services were free, the data which they were providing was absolutely free of cost. But though it was not operationally profitable, it was very well informed to the management that they are trying to do the larger function of acquiring the customers. Once they acquired the customer, their logic was very simple. Touch 10 crore customers, even if you charge 100 rupees per month from each customer, you're basically trying to clock at least 1,000 crore of revenue per month. That's a larger number. So whenever you look at operational profitabilities and the ratios related to operational profitability, you will have to take essential decisions. Let's say my revenue from sale of product is 100. My cost of goods sold or the product for manufacturing, it took me almost 78 rupees. The labor charge, the power, everything included, the cost of production was more than 100. That means if I show you that the operational profitability is in a negative, that means that you have to either cut down on the cost or you have to take the most essential function of improving your sale price. So you have to start negotiating with the customer saying that I am not able to recover my cost. Therefore, I will have to start increasing the sale price of the product. This way, or these kind of decisions are called as pricing decisions. These pricing decisions can be only taken when the management is sufficiently equipped with the evaluation tools related to operational profitability. Now, whenever we talk about decisions which the management takes, they can take decisions based on budgeting, capital budgeting. How do I source more capital? Am I going to dilute my equity? Am I going to raise more borrowing? All those are called as capital budgeting decisions. Whether I have to buy an asset, whether I have to lease an asset, it is a capital budgeting decision. These decisions relate to either the financing activities or with respect to investing activities. How do I finance it? Where do I invest? Whether I invest it or whether I take it on lease. These are all decisions relating to capital budgeting, and these decisions are dependent on the information which is provided in ratio analysis, which is an essential tool for evaluation. You're planning an analysis of the company's performance. Now, you first take the past data, make an assessment on how I have to focus on my future. Let's say a particular product has been doing fantastically well. Then I'll start marketing more on that particular product or concentrate more on that particular product so that I can push myself to the essentially highest. Look at an app called as Urban Club. If you look at Urban Club, especially during the period of the summers, they try to actually sell advertisement related to AC servicing. Is that the only product which Urban Club has? Absolutely no. That is only one product out of the various other products which they offer. They provide, the saloon services, they provide massage services, they provide cleaning services, multiple other services are there. But during the period between March to June, they normally push on this AC servicing, marketing cost. That is because I know that during that period, these inquiries are the highest. If they start basically investing in this particular idea, then the app gets installed on all our phones and they can start pushing their next advertisement. Now, have you seen Urban Club doing a similar advertisement in the month of July or August or September? Absolutely no. Because that is not the selling point. That is the planning of the management. How did the management get to plan this? Because of the information which is available there. Here, now, strategic decisions. Strategic decisions are very simple. Shall I launch a new product? Shall I shut down a new product? Shall I venture into new geographical territory or should I close down the geographical territory? Ramraj Cottons can only sell products probably in South India. The same cotton, the dhoti that they try to sell, if I want to sell it up in Jammu and Kashmir, it is not sustainable because the temperatures are too cool for a cotton clothing like Ramraj Cotton. Let's say ignorantly they went and established their enterprise in the northern part or severe colder regions. Then what happens? You start giving them an evaluation saying that this particular unit here is making severe losses compared to the other units which have been making significant amount of profit. So they make a strategic decision to shut down that particular unit or to introduce a new product in their store which is made of probably a woolen dhoti. A woolen dhoti would actually even suffice. So these are strategic decisions which the management takes based on the information which is already available with them. Now, operating level decisions are basically very simple. In simple sense, either to cut down on the cost That is what is happening right now. Right now, there's a panic situation. A lot of people are hiring, firing the employees instead of hiring them. These are all operational decisions because they are not operationally sustainable. So they make an effort to basically cut down on their operation cost. How do I cut down on my operation cost? By basically reducing my excess workforce or by shutting down my machinery when it's completely idle. Try to make sure that you conserve energy as much as possible, either in the form of human resource or any other form. Now, why are these tools and evaluations and these decision makings, are they really important? Have we seen any practical company failing in this point? Absolutely. There are so many companies which fail without understanding the significance of finance and its evaluation in decision making. The best example which I can give you, which I very recently came across, was Garmin. Garmin was a company which was doing fantastically well even before the introduction of Urban Clap and all these companies, because this company came into existence far before in 2010, 2011 itself. They run really well up to 2015. They provided customer services at doorstep, which was on-demand electrician, on-demand plumber, carpenter, electronics, pest control, all these things were provided by Garmin. But in 2015, their services were only restricted to laundry. Only the dry cleaning, washing, iron, wash, fold, steam ironing, express services, these are the only things. All those, the remaining services were eliminated. Why do you think they were eliminated? Because he failed in addressing the most important factor, that is operational efficiency. The operational decisions were a miserable failure. Garmin could not even recover the operating costs from the other segments. So they slowly reduced the number of offerings that they had. Had probably Garmin been more successful or have taken better decisions, today probably we would have seen Urban Clap as a tier 2 product. Today they more look like a monopoly in the market, though they are distorted other people who are trying to venture into the same segment. But probably Garmin would have been a very tough competitor because there was always an early entrant advantage. Why did Garmin fail? Huge operating cost. They could not pick the processing, the pickup, the drop. Everything was so costly that they could not even sustain. And ultimately they could not even raise the next round of funding to be able to meet these costs. Ultimately today, when they don't understand unit economics, when they don't get into operational finance, this is the fate of how companies fail. So this is not one example. I'm just picking up one example which is quite relevant, quite recent, because everyone might have used the app Urban Clap, and this Garmin was doing a very similar service. Now, when we see that even companies like this have failed, which has a fantastic business idea, but they could not take proper decisions or timely decisions, or maybe were not equipped with sufficient information. This is the essence of what a finance can do. A finance can make a business and also break a business. Though finance is made by the people, but ultimately that is the oxygen of a business. Without the oxygen, nothing will work. Even your lungs and heart is going to fail. The same way, even your business is going to fail if you're not able to concentrate on your finance. Now, let's move into the concept of tax loss. Now, whenever we look at finance, predominantly people still think that, we are only talking about the taxation perspective. Absolutely no. There's a lot of more evaluation and ratio analysis and decision-making process which is under finance. But don't forget the very essential element also, which has become very small or very minute today, is your taxation laws compliance. Remember, when we talk about tax laws, predominantly what is the major tax law which applies to us? Income tax and GST. These are predominantly the most prevalent tax laws across all industries, across all human beings. Because you and we keep paying this amount of GST on every product we consume. And at the end of every year, we have this responsibility of filing our income tax returns and making sure that either an additional payment is made or a refund is claimed. So these are compliances which we have to do. But are these the only tax laws? Absolutely. There are multiple other tax laws also which are applicable, but they would be relevant from industry to industry. Let's say in the construction industry, a RERA is applicable. To a person who is a foreign exchange earner, FMI is applicable, or a PMLA is applicable. So these are certain acts which are applicable to certain industries and certain companies. But income tax and GST predominantly applies to most of the industries. GST, excepting one or two, that is your liquor, your fuel, these exceptions. Otherwise, most of the items are already covered under the GST. Clear? Now, your applicability of tax laws, let's say for GST, the basis is your turnover. If you hit 20 lakhs of turnover in a particular calendar year, you have to comply with the GST rules. You have to start taking an application. Until then, the GST application need not be even processed. Income tax, very important is your residential status. The residential status of an individual depends on how many days he has visited or he has been in India. And that changes the entire taxation of your income tax. So it is very important to understand what is affecting my tax laws. Clear? Yes, even tax laws are dependent on corporate structure as well. A private limited company pays only a tax of 15% if it is a manufacturing company and 22% if it is a non-manufacturing company. But if you look at individuals, partnership firms, we all pay income tax at a higher tax slab at 30%. Clear? It is very important to comply with all these rules. It's very important. The reason is you will start, if there is a non-compliance, you will start incurring a certain amount of interest cost, penalties, prosecutions, sometimes unnecessary loss of business hours because we are traveling around to the department again and again, sometimes even to the extent of imprisonment as well. So it is very important to have all our compliances in place and if possible to find right people to do the compliance duty. Because when we talk about compliance, it is not just to income tax and GST. You also have certain other acts like SEZ, FEMA, RBI. All these also require definite amount of compliance. Clear? So income tax laws applicable are with respect to TDS, advance tax, income tax returns and tax audits. GST laws regarding GST filings, input tax credit, what is eligible to be claimed, what is not eligible to be claimed. Today I'm sitting here in a hotel room and there is a hotel bill, there's a GST on the hotel bill. Since I have come visited here for work, the amount which I have received in the form of GST, which I paid in the form of GST, I'll receive as an input tax credit. So it is important to know whether the input tax credit is available on that particular activity or not. This mobile phone which I have, I paid GST on this, but the GST on this particular product is not entitled to be claimed as input tax credit. You might say it is the same GST, but still I cannot claim it because this mobile phone, I am not actually using it for providing my service. I might be using multiple things, but not this mobile phone to provide my service. If I'm using the mobile phone only to provide a particular service or to manufacture another product, then only the input tax credit is available on this.
I have a question here, please.
Yeah.
So what if I need to buy a machine or a mobile phone to render my services? Something like, I'm going to use that mobile phone for my business operations. I may be taking my personal calls also on that one. But it is more for, from the business standpoint, I'd be operating, that I'll use that mobile for business operations.
Exactly, that's the point. So when we basically come into a situation where it becomes debatable, whether you want to take an input tax credit on this mobile phone or not, that becomes a debatable situation. Because you might be also using it for personal purpose. And is the service that you're rendering directly related to the mobile phone? Is there any particular service which you are providing directly to the mobile phone? Let's say, for example, I am a cab driver. If I am a cab driver, I buy a cab, then the credit which I have, the input tax credit which I get by buying that particular car, I can take it as a credit. The reason why I am eligible to take that credit is because the service which I am rendering is the transportation. So with that transportation, I am also paying GST on that. So what happens is whatever input tax credit which I got while buying this particular car, I will utilize it against the GST which is payable. But you and me buying a personal car, you and me can claim that, see, this personal car, I'm using it only for my office use. For the personal purposes, I'm not even going out anywhere. So that becomes debatable. But is your service directly related to the car? That is again one big question. So sometimes a few things are indirectly related to your service or the good that you're manufacturing, but they cannot be considered as far as GST credit is concerned. So when we talk about GST credit, it by itself is a very enormous concept because they have to dwell into too many things to understand what the GST credit. But in simple sense, understand like this: if a particular product is used in manufacturing another product or providing another service, which is also falling under the GST ambit, and you are supposed to pay GST on this final good or final service, then you can claim the GST input on this good or this service which you have received. Clear?
Yeah. Thank you.
Hello, just one question.
Yeah.
So if my turnover is less than 20 lakhs, I don't have to pay GST, right?
1 second.
I think it's now 40.
Is it 40 lakhs now?
I'm not sure, but I read somewhere.
Okay. Thank you.
But I would wait for
No,
some.
it is still 20. There are a few states which have actually extended the limit till 40 lakhs. But most of the states are still with 20 lakhs limit itself. So the first 20 lakhs is what the GST registration is not necessary. If you register for GST, then from the first rupee onwards, you have to pay the GST amount. Okay? So I don't take GST registration up to 20 lakhs of turnover. Once I touch 20 lakhs and I start taking the GST registration, from the day when I start taking the registration, I have to start paying the GST amount.
So,
And this cycle gets resetted every year. So this year I did 19 lakhs. Next year I do 19.5 lakhs. I am exempted for both the years.
so okay, it is only 20 lakhs per annum. Okay?
Per annum.
Yeah, thank you.
We do year 1 at 20 and we apply for the GST. In the second year, we do 19. It is exempt. That year is exempt.
I didn't get you.
My question was, if we reach 20 lakhs turnover and we apply for the GST, but the next year we only get 19.5, do we still pay
Already
GST?
registered. You already registered for GST. Even if you do 1 rupee of turnover also, you are supposed to pay the GST.
Okay, right. Thank you.
So let's talk about the last topic, which is primarily the most important and my most interesting topic, which is budgeting. Guys, budgeting is one most essential thing, and budgeting is not different from what we generally do. Now, you know that you know what you get on a monthly basis. Let's say my salary is about 1 lakh. So I plan my expenditure exactly to the extent of the same 1 lakh. Let's say my expenditure has extended and I budgeted it to be 1,40,000 while my salary is only 1 lakh. So that gives me a decision making now. Because either I have to reduce this 40,000 of expenditure or I have to borrow this 40,000 from somewhere. So these are simple budgets which any other person would have prepared for their own personal finance. The same thing applied on a larger scale becomes a corporate budgeting process. So in corporate budgeting, basically it is very, very important for us to raise finance, allocate finance, because allocation is more important. You raise finance for a particular purpose. Let's say I am looking to raise finance for investment for my working capital needs. That means I start buying more raw material. I might be allowing extra credit to my customers. All this is working capital decisions which I make. Now these decisions are only based on the budgeting that you've already done. So corporate budgeting process, it is not a very complicated process, but understand it is the most essential process in raising capital. Without a budgeting, you can never raise capital because you will never be able to tell what exactly is your requirement of money. Very recently, I met a person and he was telling me, I have this particular idea, and he showed me the entire idea. I asked him, fine, your idea looks very good. tell me how much are you expecting? He said about 1 crore. I asked him, what exactly do you need the 1 crore for? He said, I need to develop the product further. Then my question was, what is the development cost? Then he said, I have to work out on it. Then how did you even arrive at 1 crore? He said, I thought 1 crore is very common. Everyone is going to ask. Now that is how silly people look like when they do not budget. Imagine this person has worked out exactly saying that my technology ask is 70 lakhs, my operational ask is 20 lakhs, my marketing budget is 10 lakhs. If you would have put it up very well in a corporate budgeting process, his ask of 1 crore would have made a much more better sense than simply asking for 1 crore because I thought 1 crore is sufficient. How do you think it is sufficient? It is not sufficient until and unless you have worked out some numbers around it. So that's the reason why always you have to plan your resources, make sure that you raise resources, allocate resources, and make strategies for basically making sure that these resources are allocated properly. Decisions which are related to raising finance, repayment of finance, expenditure or new investment activities or leasing out activities are all forming part of capital budgeting process or a corporate budgeting process. Now, when we look at a budgeting life cycle, it always starts with determining your goals. The first thing that you have to do is, I need to have a goal. I have to start manufacturing 10,000 plastic bottles per day. So that is my goal. When I have a goal, like I have to manufacture 10,000 plastic bottles every day, the first thing that I'll start looking at is, what is the available machine? Let's say a machinery from Germany is basically costing me about 10 crore rupees. Or a machine from Japanese technology is costing me 8 crore rupees. And a Chinese technology is offering me the same machine at 3.5 crore rupees. Now, depending on what I want, I will start picking up one particular product and I'll say, okay, fine. I think Japanese technology looks better and this 8 crore rupee is my capital cost. So I set a goal of actually having to produce 10,000 bottles based on which I find that this machinery is the best suited for me. So this budget I made for 8 crores. And I said the transportation, installation, everything would cost me 1.5 crore extra. That becomes 9.5 crores. I said to establish this and to make sure that it is ready for commercial operation, it takes 4 months. During the 4 months, the operating expenditure is another 50 lakhs. So that means my ask became 10 crores. So by making a proper budgeting preparation, you will come back to exactly know what is your financial requirement and whether this particular product is beneficial or not in the entire production cycle. Let's say 10,000 bottles, each bottle is getting sold at only 2 rupees. That means I'm making 20,000 rupees per day. If I make 20,000 rupees in a day, then what is the amount which I'm making per year? And what is the average profitability on this? If I calculate and I identify that basically the profitability is not sufficient to service my debt, then it is better I drop the decision of making bottles or going for this machinery. Rather, I would go for a cheaper machinery which is available in the Chinese technology. So these decisions are very important and which form part of your budget preparation. Once the budget is prepared, you first go for exchange of ideas among your decision-making authority. They give an authorization to the budget saying that, okay, go ahead. We are fine with buying a Japanese machinery. Go ahead with the implementation of it. That is authorization of the budget. Then they start executing it. That means they start placing an order for the machine. The commercial operations begin. And after you start your commercial operations, then you start measuring. I estimated that it is 10 crore. But actually what happened was I spent 11 crore. I started understanding where did I go wrong. I said, I thought the transportation cost would be less than 20 lakhs, which was my budget. But unfortunately, I observed that the amount of transportation cost is more than 25 lakhs. So I have overrun my budget here. My operating cost for 3 months was expected to be 50 lakhs. But I started hiring people much earlier. I started marketing much earlier. So there was an extra burden or extra burn of another 50 lakhs, which I did not budget for. So all these are called as variance analysis or controls. Controls and accountability is the last phase of any budget because based on which you understand whether your budget was implemented effectively or not. Once you understand that your variance is too high, a variance of 5 to 10% is generally acceptable. Anything more than that over the budget, then that means your management skill or your implementation skill has to be questioned out. Clear? So these are the 5 phases in which budgeting life cycle goes, and that will bring us to the end of discussion, and I am open for Q&A.
Yes, any queries from participants? You can also type in the text box.
Question from my side. Do we have any predefined templates? Because all these things, as they deal with the numbers and everything very much, the percentages and all, you are very, very specific about them. Do we have models available, or would you prefer any website for downloading these models?
Financial modeling is not a template-based approach. Okay, so basically, it is a template which you first sit down and make someone get that the drafting done. See, once the template is ready, I think you can use the template multiple times. But as such, a template may not suit every single requirement. It's like probably a jeans that you wear. Okay, it has to be suiting to your requirement. It has to be the same fit. It has to be the same fabric that you want. So this is very, very important for you to have an understanding of what exactly your business does. Your business, there might not be an apple to apple comparison. Same way, you can never have a ratio analysis which is exactly the same for all companies. It is not possible. So you will have to make an MIS report custom ready, at least for first time. Once you have it custom ready for the first time, I think you can start picking up from there.
Got it, okay. Yeah, thank you.
Regarding marketing budget that you mentioned, is there a breakup of components? Well, see, the breakup of components always depends from enterprise to enterprise. And that's the reason why I really didn't dwell into the depth of it. Depending on how the marketing is. Let's say I'm a B2B company, I don't really incur a lot of marketing spend. Let's say, for example, there is a Hyderabad-based unicorn called as Darwin Box. You didn't even see one particular advertisement of Darwin Box still reached a $1 billion valuation. That is because their company is into the B2B. But look at companies which are smaller companies, which do not even have that kind of valuation, make a lot of noise as far as Zepto is concerned. A new app which is being used now, right? They make a lot of noise. There are so many sponsors, they are doing so much of activities outdoor, trying to reach out to each and every one of us. But you have to understand their business cycles are different, the business operations are different, their objectives are different. So marketing's components, there's no breakup. You will have to make your own breakup. How to split a budget? See, budget generally gets split into 2 major components. One is your capital budget and one is your OPEX. Your operational expenditure is a different budget, your capital expenditure is a different budget. Because the capital expenditure, you cannot expect to recover immediately. So you will have to make sure that your capital expenditure has to be recovered in small parts every year. Because no one is expecting you to make a bullet payment of your capital expenditure. Let's say I install a machine for 5 crores. I don't expect 5 crores from it in year 1 or year 2 or year 3. I expect it to give me at least 50 lakhs, 60 lakhs, 70 lakhs every year, like that, probably for the next 10 years, so that I can recover back this 5 crores, whatever I spent on the machine, in at least 5 to 6 years.
And how do we know which taxation forms to fill out while filing our taxes?
I am a chartered accountant myself, so every chartered accountant more or less does the same job. Okay. See, they're studied well enough to be a qualified chartered accountant, I guess. So I really don't differentiate between any chartered accountant. Or I'll put it like this, I would say even a Deloitte or a KPMG kind of an enterprise and a person who is a single man partnership CA firm, are exactly doing the same job. It is just the way they do it. That is the only difference. Probably a Deloitte would do it in a much more professional manner, but probably this guy who's an individual may not be doing or may not be maintaining the same kind of documentation that they do. But as such, regarding the knowledge part in filing your corporate tax returns or your individual tax returns, I basically think any chartered accountant is exactly the same.
And if we were to go and hire an accountant, how would we find someone who would?
Hiring an accountant this time has become very difficult, especially in the last year or so, because they have become very demanding, and we don't find sufficient number of people also doing the course because we don't have an intermediate education for accounting course. You only have to take a BCom there. That is the only possibility for us. And most of the BCom people,
Right.
they really don't enter into this accounting industry by any chance. They normally get into industries, into probably international taxation because Deloitte, the Gachibowli building is there, and they basically hire these kind of BCom guys. So not many skillful people actually enter the accounting program. That is the reason why, and other than BCom, there's no other accounting course, frankly speaking. That is the reason why we find a lot of shortage as far as accounting is concerned. But however, if you understand, you don't really require a full-time accountant at this point of time because there have been a lot of new ERPs which came up, which are simplifying the accounting process. So you really don't need a full-time accountant to actually do your duty because most of the things are automated. And right now QuickBooks is shut in India, but there are similar programs in India like Zoho Books and other people who are providing ERP solutions which are really fantastic. They reduce most of your accounting.
Are there any? Right. Are there any softwares like you said that you would suggest yourself?
I've been a very fancy of QuickBooks because I find QuickBooks is one of the best. But unfortunately, they're quitting India. So you can always go for the second best option, which is Zoho Books.
Right. Thank you.
Anything else?
If there are no queries, I think we can close the session.
I think, sir, there is Sake Pavan Kumar. He has a question: how to split budget for various tasks?
Yeah, I just told him, right, that, there's no one way of splitting a budget. Predominantly, you can only differentiate between the capex and the opex. These are the only two things: capital expenditure and operating expenditure. I told you, right? Operating expenditure you would want to recover every year. Capital expenditure you expect to recover probably over a period of time.
Hafiz sir, I think that's it. We can end the session.
So once again, thank you so much, Santhosh Mehra sir, for your time.
Thank you.
I'm sure all the participants now they are clear about their accounting, auditing, and other whatever doubts they had before this session. Any further queries you have, you can always reach out to us. We will forward those to Santhosh ji.
Sure, sir. Thank you. Thanks a lot. Thanks a lot, participants, for your patience.
Sridhar sir, you are there in the call?
Yes, I am there. Are you able to hear me, please?
Yes, sir. Finally, yes.
Yes, okay, thank you.
Santhosh ji, I
Okay.
think you can stop sharing your screen.
Thank you.
Yeah, how do I go about that?
Sridhar sir, you can click on present now button now.
Present now.
Sir, there seems to be an echo or resound coming. Could you please check it out?
See,
You're able to do it, sir? Sridhar, sir?
see, I am talking from my mobile phone while this is on. I mean, the lamp is also on. I think that is the reason I'm getting a echo.
Sir, then in that case, you need to switch off your microphone from your laptop.
Yes, sir, then it will get stopped.
Actually, laptop is already switched off.
You also need to reduce the volume of the laptop.
Yes, sir.
Okay.
Completely mute out the laptop volume.
Yeah, I muted out the laptop. Is it okay now?
Yes, sir. This is fine.
Please continue, sir.
This is. Acha, how do we?
There is an upward arrow present now in the bottom face. If you click it on, you will be having three options, that is your entire screen, a window, a tab. You can click on your entire screen.
1 minute, please. I think I logged out accidentally.
Once you see the entire screen window, you click on it, then the share option will be highlighted.
Can you please tell me now, sir? I mean,
Yes, sir.
I was trying to re-log in.
Okay.
Yeah.
On laptop, you click on present now button.
There is no present now button.
There is a icon which shows an upward arrow in an enclosed box.
Upward arrow. Okay. Yeah.
It shows
Correct.
present now. If you click on that, there are three different tabs.
Yes.
That is your entire screen, window, and a tab.
Yes.
You can click on your entire screen.
Okay.
Once you click on your entire screen, your screen will be visible. You click on the entire screen, then the share option will be highlighted.
Share option is not getting highlighted.
You click on the entire screen, sir. The screen that is visible to you on the pop-up.
Yeah.
If you click on that.
Okay. Now, yeah. Now it says share. Yeah.
Yes. Now click on the share. It will be shared.
We can see your screen now, sir.
Yes.
Yeah, but
You minimize this window, sir.
Now you minimize this window and open your slides.
okay.
Make it full screen, sir. You can just press
Yeah. Okay. 1 moment. Yeah, you are able to see now.
Yes, sir.
Okay.
Perfect. Please continue.
Yeah. Thank you very much. Sorry for the trouble, the initial issues. Now, basically, I am a banker. I worked in different banks for more than 24 years. And today I am here to talk about project finance and how you go about, how to take a bank loan. Because vitamin M, that is money, is the most important for any business. And, the banks are the people who actually give you money. But then the general complaint is that when you go to the bank, they care a damn and they won't give you any loans. They don't even probably listen to what you're saying. It's basically human nature, sir. Suppose I come to you and ask you for a 1 lakh loan from your personal finance. You are not a banker, doesn't matter. But I come to you and ask for some 1 lakh loan. Or forget about 1 lakh, I ask you only for 10,000 rupees loan. Will you give me? You won't. You will say, who are you? Why should I give you? If I give you, whether you will repay or not. These are the questions you would ask. So it's the same case even in the bank. Okay. So what we have to do is, we have to actually convince the banker to part with his money, that, we are going to be a good borrower and we are going to repay along with the interest and the principal. So what we do is, what I'm going to talk today is about the project report. Okay. So when you go to the bank and the branch manager will be so busy that he won't give you even 5 minutes time. Okay. Very difficult to catch their attention. So best thing is to make a project report. Everything what you want to say, make it into a report and give it to them. Okay. And then it is easy for them to go through once and then maybe at convenience, or you can explain to them in those 5 minutes some key points, etc. And then, in detail he can go through your project, and then what happens is he will be able to take a call. Now, in the previous session also there is a lot of talk about budgeting and all that. Now I'm going to get into a little more details about the same budgeting and all that. Now many people don't even know how to ask money, how to ask for money and how much to ask. Okay. So people should understand, make their calculations and then go to the bank with full details. So first of all, I'm going to talk about the financial things, the number work, So how do you actually ask for money? Basically, why do you ask for money? Because there is an expenditure. But then everybody thinks that there is only, one kind of an expenditure. Generally, I'm speaking. But there are two kinds of expenses. One is the capital expenditure and the other one is the revenue expenditure. Now, capital expenditure means something that any expenditure which you spend on something and the life of that asset or something is more than 1 year, then you call it a capital asset. Okay. For example, land, buildings, you need money for this. This is also an expenditure. But why do we call it capital expenditure? Because the life of these assets will be for more than 1 year. Land, maybe 100 years or, unlimited period. Buildings, maybe 30 years, 50 years, depending on the kind of thing. Everything like this. So we have to budget for all these things individually. Okay. Suppose there is a cost of land is 10 lakhs. You want to buy 5 acres of land to construct your factory. Now, what is the land cost of your company? Anybody, please? The seller is asking for 10 lakhs per acre and you want to buy. Okay, fine. So, anyone? You can switch on your mic and answer, please.
Sir, how much is the acre cost? 10 lakhs, sir?
Yes, yes.
So, 10 into 5, 50 plus the registration expenses and operating whatever the expenses, all transportation, everything includes.
What is the land transportation? You don't transport the land, huh?
No, sir, like we will move from registration office to that and all.
Okay. Very good, very good. So it is 50. Generally people think that it's 50 lakhs is the cost of land. No, you are absolutely right, ma'am. It is 50 lakhs plus registration and maybe there is the land may be uneven. So you have to level the land. Okay, there may be a small hill or there is some, there are many trees, you have to cut them, you have to make it normal, which can be used for construction of the factory premises, etc. So we have to include land cost, registration and land development cost. Absolutely right. Then you have civil costs. We have to do a proper estimate and go to the bank. And you cannot just say, my civil cost is, building cost will be 10 lakhs. 1 crore. You cannot just give some figure and do like that. You have to actually estimate how many SFT are you going to construct, how much of it will be shed, how much of it will be RCC kind of construction. And please don't forget, you have office space, factory space, then warehouses, weighbridge, maybe in some cases, security guard rooms, internal roads, so many things are there. Toilets, creches, canteens for the staff. including the compound wall. And sometimes you have to do landscaping as per the Pollution Control Board norms. You know, generally they say that 30% of land you have to keep it open and maybe do some gardening, etc., so that pollution is reduced. Okay, so you have to budget for all these things. If you don't budget for all these things and you actually suppose your civil cost actually comes to 1 crore and you think that it is only 60-70 lakhs because you have not taken other things into consideration, and you out of 70 lakhs you are asking for 50 lakhs loan and 20 lakhs you are contributing from your side and you are going ahead, but you will not be able to complete the project because the costs are actually higher than that. Similarly, electrical things, wiring, fittings, control panels, transformers, generators, maybe you want to go for solar panels, okay? One more question. There are 3 machines, each costing 12 lakhs, 7 lakhs and 6 lakhs. So what is the cost of the plant and machinery? Given please.
The machine installation charges?
On the face of it, it looks like crowd. Yeah, machine installation charges have to be added, yes?
Transportation.
Yeah, see, cost of machine as per the quotation, suppose you are importing a machine, there is a dollar or euro or whatever currency it is there, you have to convert that and there would be some currency fluctuation, import duties, GST, shipping, transportation costs, transit insurance also. See, you are importing some machine from Baroda to Chennai and on the way some damage is there, the machine is destroyed, okay? So you have to go for transit insurance and then of course installation costs. So all these things you have to take into consideration while ascertaining the machine cost. So typically these are, I so far talked about the capital expenses or the major capital heads. Now in the project cost, when we talk about the project cost, we have to talk about all these things, fixed assets, that is land, buildings, machinery, everything. Apart from that, most people, they forget these other components. One is the interest during construction. What happens is, you have taken a loan for construction of factory. The factory construction, let's say, takes almost 2 years because construction, then machinery also has to come, it has to be installed, power connection has to be obtained, all these things, test running, all these things may take 2 years. So what the bank does, they don't release the entire 1 crore or 2 crores to you on day one. What they do, they are disbursing the loan in installments. Once you buy the land, they will give you some money. Once the shed is constructed, they will give you some money. Once the machines are coming, they will give you some more money. It's like that. They are debiting your account for a period of 2 years. Now, the moment the first installment is given to you, the interest starts, the meter is on. So interest is levied to your account. Who is going to pay this interest now? If the company is working, you are manufacturing, selling, and then you are making profits, it's okay, you will pay the interest. But you are just constructing for a period of 1 or 2 years. But interest is accruing in this 1 year, 2 year period also. So who is going to pay this cost? So what we have to do is, we have to tell the bank, yes, I am going to take 2 years for construction of this. And as I take amounts from you, you have to budget for that also and calculate the interest and say this interest also is part of my project cost and I will pay you after I start earning my profits. Okay. This is another mistake which many people do. They don't include interest during cost as a part of the project cost. It is perfectly all right. All the major companies do this. Okay. Please don't think that I'm telling something different or something special or something. This is a very, very common thing which as I told you, I've been a banker myself for more than 24 years and I'm a project finance consultant. So for my total experience is more than 40 years. So this is a very, very normal item. This is not extraordinary item. Then other one to see is the security deposits. For example, when you take a power connection, you have to, depending on the number of kilowatts or megawatts, not megawatt, number of kilowatts you're going to take, so you have to keep some deposit with them. Or maybe your factory is your own, but your office is on rented premises. So you have to pay some security deposit to those people also. We'll see all of them. So this is interest during construction, as I already mentioned. There are 3 stages actually: project implementation period, and there are withdrawals of term loan over a period of time. Then there is a trial run period also. The moment you start, install your machines, it doesn't mean production is coming out. There is a testing time. It may take 1 month, 2 months, 3 months, depending on the nature of your company. Okay. So for all that period, you have to assess what is the interest during construction and budget for it in the project cost. See, security deposits, as I already mentioned, electricity deposits, lease rental deposits. In certain cases, government also for giving the licenses, they will ask for deposits. For example, if you want to manufacture liquor, then government asks for certain deposits from you. Sometimes it could be franchise-related deposits. Suppose a petrol pump dealer, I'm just giving Indian Oil may take some deposit from you. Or suppose you are a Maruti car dealer, the Maruti Suzuki company may take some deposit from you. Like that, depending on the nature of your activity. So franchisee or deposit may be there, or a dealership deposit also may be there. And there could be technology transfer related deposits. You are taking technology from some other, maybe foreign company or within India itself, and those people also may ask for some deposit. Okay. Then there is something called preliminary expenses. Even before you start the business, there would be some expenditure. That is, you have to start a company, you have to make it incorporated. That means you have to file this company details with the ROC, that is Register of Companies. Then there are some legal fees. You are going to get into some contract with the technology suppliers or machine suppliers. There could be some legal fee or stamp duties. Suppose you are buying some land, then you have to take legal opinion from some lawyer whether this land is free from encumbrances, and when that kind of stuff. Then salaries of project implementation team. Once the factory is being constructed, you may not employ 1,000 people, but at least 10-20 people may be there depending on the size of your company. Maybe at least some engineer will be there. So you have to pay them salaries, okay, at least for a few months. Or suppose 2 years is your implementation period, 5 people are working in the factory site to overseeing the construction, etc. All these salaries also have to be treated as preliminary expenses. Then of course, tour and conveyance expenses. Let's say you're in Hyderabad and you have to travel to Delhi 10 times for getting some licenses or permissions or whatever. Okay. Then for Gpr preparation, DP means detailed project report. Sometimes, whatever I'm talking now is for preparation of a DPR, a project report. Okay. Suppose you are able to do it yourself, it's fine, you will do it. But suppose you want to engage some other consultant or someone, then you have to pay them some fee and they will make the DPR for you. So these costs also are like preliminary expenses. Then loan acquisition costs. When you ask for a bank loan, they normally charge you something, say as a processing fee. Or there is some other fees also, for example, loan documentation that there is a stamp duty, etc. And loan processing fee is there, and unit visit expenses are there by their own officers. Whatever, there are different kind of loan acquisition costs. You have to include all of them. Then although your factory is about to start, there are some pre-operative expenses. For example, trial expenses, maybe 1 month, 2 months, trial production will be there. So there will be a lot of wastage. You think production is coming, but it doesn't come. The quality will not be up to the mark. You can't sell it in the market. Even if you have to sell it in the market, you may get only 50% of the price. Okay. Then there is something called product launch expenses. Maybe you have to do some brand building. Okay. Your product is not known. You have to send your sales team into the market for, launching your product. So you have to budget for all these things. If you don't do it and you think that you can just start your company or your production or whatever, your business, just with a few lakhs or something, you will have difficulty at the end of the day. I have seen number of promoters, not one, two, hundreds of promoters who say that they can construct their factory in just 1 year. None of them has been able to construct in just 1 year. It takes if they say 1 year, it will take 1.5 to 2 years. If they say it takes 2 years, it will take 2.5 to 3 years. Okay. Similarly, whatever capital budgeting that they have done, plant and machinery or civil cost or whatever cost they have done, it is always higher. When they came to me, I am sitting as a branch manager there. They come to me with a project report, thinking that everything is okay. We sanction the loan, and by the time they complete it, suppose they say that 10 crores is a project cost. By the time they complete it will be at least 13 crores or 14 crores, or maybe more also. I'll give you a small example. Even in your house also, suppose you want to buy a TV. You think that 30,000 is your budget. Then you go to the shop. Then that fellow shows you some 10 different models. Then your wife will like something that is 50,000 rupees. Okay, not 30,000 wala. Okay, so definitely you'll think that, okay, I am buying it only once, 20,000, okay, it's all right, let me buy. Your cost increases. Even in the civil also, you think you will put a normal tile on your office floor. But when you go to purchase a tile, you will see some beautiful tiles. So the cost increases like that, okay? Or you think that you will keep 2 sheds, and while doing construction, you think that, okay, let me do one more shed now itself. After 6 months, I want to buy another machine, okay? Like that, your cost keeps increasing. Please be very careful to contain your cost, otherwise the budget will go out of hands. Now, so far I discussed about all the capital expenses and other costs which are involved in what you call project cost, like preliminary expenses, pre-operative expenses, then security deposits. Of course, security deposits is not an expenditure, but they may be refundable deposits, but still you need the money, isn't it? If you want to start the business, you need that money, okay? So you have to calculate all these things, put them in a table and total it up, and that is the money you require for to implement your project. But apart from that, there is one more item, that is working capital. What it means is, see, your building is ready, land is ready, machines are ready, everything is fine. Okay, but then you have to buy the raw materials, and you have to pay the salaries every month, and you have to pay the electricity bill, etc. See, these are called running expenses. In the accounting terms, we call them revenue expenditure. Earlier, land, building, all those things, we call them capital expenditure. Now, for these regular expenses of production, manufacturing, etc., day-to-day expenditure, we call them revenue expenses, okay? These things are recurring in nature. Machine you buy only once, but raw materials you have to buy very regularly. Salaries you have to pay regularly. So they are recurring in nature. Now what are the various expenses? Your raw materials, some consumables could be there. Consumables could be, during production, or it could be even packaging material, okay? Suppose you are manufacturing edible oil. There could be 3-4 kinds of packaging. One is the pouches, 1 liter pouches, or it could be 5 liter cans, or it could be 15 liter cans, okay, tins rather. And then maybe you need cartons also. If you are making pouches, just pouching material is not enough. You also have to put some, normally they put 16 or 17 in one carton, right? So like that, you have to calculate what are all the costs involved. You cannot leave out even single thing. Then of course, salaries, wages, power and fuel, repairs, printing and stationery, audit expenses, so many other expenses are there, okay? One important expenditure will be there for all of us. What is that? Once you take a loan, what is the expenditure?
Interest.
Interest costs on the loans, correct. So, fine, that is also we have taken. What are the, we still have missed out one more expenditure. That is known as depreciation. Depreciation, see, these 3 things I have listed here: depreciation, writing off preliminary expenses, these two items, these are called non-cash expenses. Okay. When you are paying salaries, cash is going out. When you are buying raw materials, cash is going out. Okay. When you are paying the power bill, cash is going out. But in the case of depreciation, cash is not going out, but still it is a loss. You buy a machinery, the life is only 10 years. You buy a computer, the life is only 5 years. Okay. So your laptop is, let's say, 50,000 and 5 years is a life. 10,000 rupees is lost to you every year. So you have to budget for it. You should consider that this is 10,000 rupees as a loss. And on billing also, in 33 years, typically factory billings, 33 years, you think that there won't be any factory billing now. Or you have to do repairs and strengthen it once again, okay? Similarly, all these preliminary expenses, whatever you have spent, initially for starting your company, all those things are also to be written off, and they're also non-cash expenses, okay? So, once you decide that, these are so many project components of the project cost, fixed assets, then security deposits, preliminary and pre-operative expenses, IDC, and then working capital margin. Now, what is this? We'll see this. This is a typical project cost. Land so much, buildings and shed so much, like this. Okay, now we are saying, I will explain working capital. There are some more slides, okay? But for the timing, project cost looks something like this, okay? Now you need some 67,638. This is the amount. It could be rupees, it could be lakhs, it could be crores, whatever. So this is the amount you need to start your company. This is the project cost. Now where is the money? Where does the money come from? So this is called the means of finance. So some money will come from you or the investors, that is the promoters, and some money can come from the banks. So that you have to tabulate. See, out of that 67,638, you may say that equity capital, that means own funds. You are the promoter, you are the owner of the company, so you will bring in some 23,738 and loan could be 43,900. Now, typically in India, 25% to 75% is the ratio. That means bankers will ask you, you bring 25%, I will give you 75%. But in project costs, many banks these days, they are saying 2:1. That means you bring in 1 rupee, I will give you 2 rupees. Okay, 33% is yours, 66% is mine. Bankers are talking these days. So you have to be prepared. Okay, up to. Any questions so far, please? Any questions here? If there are no questions, yeah.
I said I'm good. Yeah, thank you.
Yeah, you're good. Okay, fine. Now, I talked about the working capital margin. So here that is, first of all, we'll discuss what is working capital and its components. So there are various components. For example, the main ones are some cash will be there always on hand. Then raw materials you need, work in process, finished goods, and some money will be in the receivables. We'll explain all these things in a little bit. Now what happens is, you start with cash. This is a typical working capital cycle. You start with cash, then you buy raw materials, then there is a process time, so there is some certain stocks, certain other raw materials which are in the work in process stage, then they become finished goods, and then you sell them, and immediately it may not get in, become cash. Suppose you are selling on cash. Of course, from finished goods stage, it straight away becomes cash. But in most of the businesses, you can't sell on cash. You sell on credit basis. So you will get money after 30 days or 60 days or 90 days, depending on your the nature of your business. Okay. or your competitive status. For example, if you are running a restaurant, then immediately people will have their dinner or breakfast, whatever, immediately they will pay you the money. So you are getting cash immediately. Or suppose you are a Indian gas supplier, dealer, the moment you supply the gas cylinder, you get back your money. So some people are lucky, okay, they will get back cash immediately. But all businesses are not like that, right? So you supply the goods and you have to wait for 1 month or 2 months. So there is a stage, receivable stage, that means sundry debtors, book debts, receivables, you call it by any name, it is all same. Then after 1 month, it becomes cash. Now let us say you start with 1 lakh cash, you buy your raw materials, then process time is 3 days, then finished goods it becomes, then you are selling on 60 days credit. Okay, now you have to sit for 60 days, wait for 60 days, you can't do anything because your money is locked up. Okay. So in order to avoid this situation, you need cash continuously in the business. Okay. Why? Because some of your money is locked up as raw material. Some raw material is lying there. For example, let us say you're a rice mill. You have to buy paddy to make rice, right? Now paddy comes only 2 seasons, Kharif and Rabi. So you have to buy maybe, nobody buys like that, but you have to buy for 6 months stock, keep them and do your milling for the next 6 months. Of course, you don't have to do that. There are other people who buy the paddy and keep it there, and you can buy once a month like that, okay? So 1 month paddy you have to store in your godowns and then keep milling, okay? Then the working process may be 1 day or 2 days, then it becomes finished goods, it becomes rice, then you sell it, okay? Then working process is also a typical, so some money is locked up as raw material. If you are able to manage raw materials only for 2 days or 3 days, it is very good. It is like a just-in-time concept, which is followed in Japan, etc. But only big companies can follow, small people may not be able to follow. And one more thing, suppose your raw materials are to be imported. You can't keep on importing every 2 days or 3 days, right? So you have to import some material once in 3 months or once in 6 months. So you have to have that stock. So you have to budget for all these things depending on the nature of your business. Working process, I'll tell you a small example of converting, the spinning mills, converting cotton to a yarn. Normally, all of you know that Gandhiji's charkha. So from cotton, you hold in one hand and keep rotating this charkha, and that cotton is immediately becoming yarn. But in spinning mills, it doesn't happen like that. The process is 1 week, okay? So you can't avoid it if you want to get good quality and all that. So depending on the nature of your industry, there would be a working process. Some money is locked up there also. 1 week for every spinning mill, 1 week stocks are lying in that stage. So you need money for that. And similarly for finished goods also, you need some money is locked up there. It doesn't mean that as soon as you manufacture something, immediately you are able to sell. Suppose somebody has placed an order for 10 tons. And every day you are able to manufacture only 1 ton. Unless it becomes 10 tons, you can't supply to him, right? You can't keep supplying 1 ton every day. It depends on your contract. So you have to hold this 9 tons for 9 days, and on the 10th, after 10th day, it becomes 10 tons, then only you can dispatch. So there are various reasons why you have to hold finished goods also, okay? Maybe you have one head office, you have 10 different sales points. So from head office, you are sending to sales points, and there will be stocks at head office also and at sales points also. So you have to calculate all these things. And of course, receivables is another place where your money is stuck, okay? Maybe for 30 days or 15 days or 60 days. Now, this, typically bankers, what they see is, they always measure it in the number of days. Raw materials, how many days are you holding? 7 days, 10 days, or you hold 1 month stocks, like the 30 days. Working process, of course, not much discussion there. It all depends on your process, 3 days, 7 days, whatever. In fact, there is some working process where it could be more than 1 year also. Can anyone give answer, please? How can working process be there for 1 year or more than 1 year? Any such business? These business people are there in every city, every town. Their working process time is more than a year. I'll give an example. These are the people who are into construction of apartments. Okay, they are manufacturing apartments. They are building apartments. So their process time is more than a year. They need almost 1.5 years to 2 years to complete a building, right? And then they sell their houses or the flats. So depending on the nature of your business, the working process time actually varies. Okay. So this is, let's say, 1 week. Finished goods, you have to keep stock maybe for 7 days, 15 days, like that. Some companies keep even 1 month stocks, and then receivables typically 60 days. So this is the cycle, how much it takes, and accordingly you need cash for this. 30 days of raw material holding, how much it costs, okay? You budget for it. Work in process, so much money, budget for it, like this. You calculate how much money is required for your working capital. People, if you are not very conversant with this, you can make mistakes and you think you can run the business with limited amount of cash. The most efficient companies, they will try to reduce this working capital cycle. Reduction means the number of days. Raw material instead of 30 days, if you are able to do it for 15 days or 1 week, very good. Work in process also, by buying a new machine, you are able to reduce the work in process time, excellent, like that, okay? So you have to find ways of reducing this working capital cycle so that you don't need much money, which means you don't have to borrow much money, and automatically it means you can save on interest costs. One interesting thing in this cycle is that there is cash, raw materials, work in process, finished goods, receivables, and in red you will find creditors. What it means is it is actually a negative figure. In the sense, you don't need this money. For example, when you are selling something, you are selling on credit basis for maybe 30 days or 60 days. Similarly, when you are buying raw materials, maybe if you are a very good company and the supplier of raw materials believes you, then he may also give you credit of 30 days to 60 days. In that case, you don't need so much money. Okay, you don't have to pay for the raw materials immediately. So your cash requirement is less. Okay. So when you are calculating this working capital cycle or working capital amount required, okay, you can say that if you are able to manage some credit from your suppliers, you can reduce that amount from your total requirement. Best thing is, if you are getting great suppliers for, who are able to give you for long period. But then of course there is a catch. Nobody gives you free. If he is giving you raw materials for 30 days or 60 days credit, obviously he is loading some interest also onto the raw material, onto the cost of materials, okay? So you have to see whether buying on cash basis is cheaper or paying a little bit extra cost and getting 60 days of credit is better. You have to do that calculation and take a decision, okay? So material management, if the material is readily available, that is your raw material, readily available, seasonal factors like paddy I said, imported materials, you have to keep out of stocks. Then there is a lead time. If you order for some material, some people may supply after 1 month only, okay? So you have to order in advance. Then there is economic order quantity concept is there, okay? So how do you value the raw material costs, etc.? There is a FIFO, LIFO price, okay? That is first in, first out or last in, first out. Generally it is first in, first out or average means. Doesn't matter, it comes later on. Receivables. See, you should be able to reduce your receivables collection time to as low as possible. But of course, it depends on market practices. If everybody in your industry is giving credit of 30 days, of course, you will also be forced to give. There is a competition, and in order to, suppose there is an established player, and he can sell it probably on cash basis, but you are a new entrant to the market. Maybe in order to face the competition, you have to give some credit, okay? So All these things you have to bear in mind. But please remember, many businesses have been closed down because they gave credit. They sold on credit basis and they are unable to recover their money. It's a very high risk. The way banks are giving loans to people and they are not able to recover, some of them, you also may be able, you also may give some loans to other people, that is selling on loan basis or credit basis, and you also may not be able to recover the amount. So forget about profit, you are losing principal also. The whole value you are losing, okay? Very dangerous. I have seen many businesses, they lose money or they incur losses only because their customers who bought the products from them, they don't return the money. Okay, so be careful, and anyway, you have to judge who is there and all that on the other side. One good thing is supplying against LC. Okay, LC means letter of credit. Now, what is a letter of credit? See, we can ask from bank two kinds of loan. One is fund-based loans and another one is non-fund based. So in fund-based limits, that means the bank actually gives you money. In the case of capital expenditure, for purchase of land, building, machinery, etc., you should ask for a term loans, long-term loans. Term loan means which you can be repaid in 5 years, 7 years, 10 years like that. Many people I have seen, they are very enthusiastic. They say, "Nine, sir, I will repay in 3 years." Please don't tell the branch managers like that you will repay in 3 years. Confident, the businesses don't work as easily as you imagine. Go for 7 years, go for 10 years. Ask for 10 years, at least go for 7 years, even if you think you are able to repay in 3 to 5 years, okay? Because markets don't work like that. Suddenly there is something called, what is this? We had the COVID and all that. 2 years, everybody lost business. Anything can happen in this world, okay? So let's not be over enthusiastic when we make our commitments to the bank, okay? Ask for a long time and keep it as far as away as possible. And if you're actually making good profits, repay early. Okay, you prepay the installments. It doesn't matter. No branch manager will say, no, don't prepay the loans, okay? So best thing is go for early repayment if you have a lot of money, but always ask for more time. In the case of working capital, you should ask for another kind of loan that is known as working capital loan, and banks also call them cash credit loan, or they also call it overdraft. Some banks call it overdraft, some banks call it cash credit, okay? Basically, both are working capital loans, and there are other variations also, bill discounting and things like that, okay? So, for buying a machinery, you should not ask for a working capital loan, because working capital loan is a short-term loan, whereas a long-term loan is there for 7 years like that. Suppose you want to purchase a flat, you go for a home loan which is repayable in 15 or 20 years. You don't borrow from your friend some hand loan 15 lakhs and buy a flat, and then after 1 month that fellow will ask you, give back my 15 lakhs. What will you do? So you should not use short-term sources to buy long-term assets. This is a very, very important principle, and many businesses have failed only because they don't recognize what is the long-term source of fund and what is the short-term source of fund. Long-term sources of funds are always good, okay, because you have time to repay. Short-term sources of funds, you have to take, you can take, but you should use it only for short-term requirements, okay? So that is about fund-based, but there is also something called non-fund-based limits, that is LC and bank guarantee. Now let us say you are, why do you need LC? In this case, bank doesn't give you any money. They will give you only a piece of paper. What is the use of this piece of paper? How does it help me? It is helpful. For example, let's say I am an iron and steel trader. I go to Tata Steel, I want to buy some 10 tons of steel, 60,000 rupees per ton, 6 lakhs I want to buy. So I'll go to them and say, sir, please give me 10 tons of steel, and after 1 month I'll pay you. Then fellow will say, who are you? Why should I give you a loan? Okay, I never saw you, so I don't trust you. Okay, then what I do, I'll go to my bank, which is State Bank of India, and say, sir, you know me very well. I've been having an account with you for such a long time. You give me one LC facility, letter of credit. You give a letter to Tata Steel saying that, okay, that I am trustworthy and I can be supplied. Okay, then bank will give a letter to Tata Steel saying that, yeah, so-and-so is my customer and he needs 10 tons of steel. Please supply to him. 6 lakhs is the value and he will repay exactly after 1 month. And if he doesn't repay, I will repay. That is what State Bank says in that letter of credit. Now, I paper to Tata Steel and say, see, my bank has given this letter. Tata Steel doesn't believe me, but they will believe the bank. They know that if I don't pay, State Bank of India is going to pay them. So, keeping that paper with him, he will supply the 10 tons to me without, taking advance payment. I don't pay him any cash. I take 10 tons, I sell the things, and then within 1 month, I pay to Tata Steel. Okay? So, bank is happy, I am happy, Tata Steel is happy. Fine. Now, what income for the bank? In a normal loan, bank is charging 10%, 12%, 14%, something like that. In case of LC, they charge 2%, and that is not known as interest, that is known as commission, LC commission. So they take some 2% commission, and they give me an LC, that's it. Okay? My job is done, their job is done, they have not given any rupee, 1 rupee also they have not given. Okay? Similar thing is bank guarantee also. There are various other ways in which you can use bank guarantee. Okay? Any questions here, please? Okay, we also have to talk about so many ratios there, how much profitability will be there for us. Okay? The growth ratios, how are we going to grow in the next 5 years or 10 years? See, when you give your business plan to the bank, you may have to give for 5 years or 7 years or like that. Now you may ask for how many years we have to give you, or to give to the bank. Suppose you are asking for a 7-year term loan. You give your projections for the next 7 years. Okay? So that is how you have to calculate. So we have to calculate so many other ratios also. But we have only 1 hour's time, so we can't discuss too much. So we have to do break-even analysis. That means at what level the business would be breaking even or making profit. What will be the return? And debt service coverage ratio means how are we going to repay their term loan? How are we going to pay the EMIs or monthly installments? So there is a specific ratios for that. We have to calculate all of that. Okay. So when we give the project reports, these are all the things. You give the basic details. That means, who are you? My name is so-and-so. I am the promoter. This is my education. These are my qualifications. This is my experience in this line of activity. This is my overall experience. Okay. And details of your products and your promoters. That means you have to write about yourself and you have to talk about your capital structure. That means how much money are you going to bring in? Your own money. Okay. Then whether there is a market survey, something. Whether there is going to be adequate demand for your product. Okay. What is going to be your market share. Okay. And what is the unique selling proposition of your product? Somebody is manufacturing pens, you are also manufacturing pen. Their pen also writes, your pen also writes. What is special about your pen? Something has to be unique. Otherwise, it's just like a mass product. Okay, banks give loans for mass products also. But if you are able to, establish something, unique point over your competitors, it is good for the market, your marketing also, and it is easy to convince a banker also. And how are you going to market your product? Through dealerships, advertisements, promotions, whatever. You can talk to them. Your technology, what technology are you going to use in your product, your process flow chart, then the list of plant and machinery, then you have to talk about operating capacity, install capacity. See, many people, what they do is, they will install a machinery which will produce 1 ton per month, let us say. But they will talk, of sales figures which they unless you produce 2 tons per month, you can't achieve those sales. Okay, people talk like that without understanding what is their installed capacity. Okay, the normal joke is that if you have 100 hens, okay, layers, then you get only 100 eggs per day, isn't it? But suppose you say that every day I'll get 1,000 eggs, I'm going to sell this, I'll get so much income. How will you get? Okay, you can't get so much of production, right? So you have to talk about all those things. How many staff, whether the staff is locally available. Very highly technical staff means maybe you have to bring from some other city or maybe some other country also sometimes. Okay. Then you have to give implementation schedule also. Suppose your factory is going to be constructed and production takes place after 2 years. You have to give step by step when the land will be purchased, when the licenses will be obtained, okay, and when the building will be completed, when the machines will be installed, all those things, okay. So availability of raw material, location, and another thing is power availability, and suppose you need water. So water availability in that area, and compliance of pollution control norms is the most important thing. People forget that. Suppose you are orange zone or red zone kind of industry, definitely you install some pollution control equipment, and you have to take permissions from the pollution control department. There are many factories which are closed immediately, after they start their production, 3 months, 6 months, 1 year. After 1 year or 6 months, they are closed because they are not complied with the pollution control norms. I have many customers like that, okay. When we gave loans, their factories were closed. So you have to get, along with your project report, you also have to give all these things. That is your certificate of company incorporation, or suppose maybe yours is not company, yours is a partnership firm. So partnership deed, okay. Then industrial licenses, GST registration, PAN card, all those things, okay. Suppose you are importing or exporting, then you need an EXIM code, okay. Export-import code is required. For constructing of your factory, you need local municipal or panchayat approvals, inspector of factories, okay. If your factory is in the airport zone, you need approvals even from the clearances from the airport. Okay, this is for very advanced companies. You may have to give technical reports, or banks may say that if yours is very highly technical kind of industry, banks may ask for techno-economic viability study. And if you are asking for a big loans, definitely they will go for external credit ratings also, like CRISIL, ICRA, KL, Fitch. These are the kind of companies which give ratings to the company, like AAA, AA, that kind of ratings they give, okay. So banks may ask you to get that kind of a rating also. Any questions, please? When banks are analyzed, yeah.
That ratings is based on what, sir? In what basis they will rate?
There are so many things. There is overall country also performance. Overall country is in a positive mode. Everything is developing. Okay, good. Let us say you are in a pharmaceutical industry. How your industry is doing well, and then your particular industry. There are marks for everything, and then your own experience, overall experience. There will be some marks, and your experience in this particular line of activity. You may be having earlier experience in cement industry, but now you are starting a liquor industry. So what is the connection? There is no connection. You may not get more marks. Okay, like that. There are so many parameters where the market, the demand for your product, and the uniqueness of your product. Like that, there are so many factors which they take into consideration, and they decide on the rating. Okay.
Okay, sir.
Many of the things will be financial related also. Suppose your project cost is 10 42 crores and you are putting 8 crores. Okay, then you make a good rating because your stake is high. Okay, and you are only asking for 2 crores.
Okay.
Like that.
Sir, one more doubt.
Also. It is not
Sir?
Yes.
Sir, good afternoon. I'm Saujanya. Sir, in the COVID time, many businesses might have got closed, and like, how did you ensure that they have repaid? What was the mechanism that banking has followed? Because you are the most affected segment.
Yes. Actually, Government of India itself gave some rules which said that they gave interest repayment holiday for 6 months. So every borrower, including your home loans, etc., individuals also, they were all told that, okay, you don't have to pay. If you have money, you pay, it's okay, but you don't have to pay. And all the business people, they were given 2 special loans, okay? Some almost equal to 20% of their normal loan, okay? Suppose your existing loan is 1 crore. Another 10% is given extra, 10 lakhs, so that you meet some, you overcome the difficulties which the industries have faced in the during the COVID period. And there is a second loan, another 10 to 15%. Some companies who are eligible for that loan also, they were also given loans. Okay. So what the banks did is, they said don't pay any interest installment for 6 months, and they gave additional loans also to overcome the difficulty. So that is how they have ensured that most of the business survived. Okay.
Sir, were there any sick industries which have in a particular segment or in a particular sector which have increased? Because many companies might have gone sick also during this time.
Yes, yes. They have become sick. What is the question?
I am just asking, like, under your supervision in your territory, were there any industries or specific organizations which went sick during this time?
Why, you want to buy or what?
No. Basically, no, we have been telling students that, the effect of COVID is very high. Like,
Very high.
yeah. And at the same time, we also have seen people like Vijay Mallya, flying away nicely with whatever he could do. And there were also sarcastic movies which were made on this. But at the same time, some people have really genuinely lost their businesses. They have become sick. So is there any, like, 1-2 specific segments which we can tell students that, these are the most affected areas, or what is it that, because we have seen that, a major trend shift that people have lost also some kind of desire in doing businesses.
For example, the tourism industry people were affected very much. The airlines, the buses, the travel agencies, they all, because nobody traveled. And the hotels and restaurants, they were also hugely affected because nobody traveled, nobody ate outside, nobody bought things, okay? Oh, of course, these are, you can say 2 major industries are hotel industry and tourism related industry. Most of them became, they went into difficulty. The companies which did well are pharmaceutical companies and hospitals. There was one hospital, I know personally, they were actually about to default. Okay, they were becoming an NPA, and COVID came. And now they repaid all their loans, they are regular now, and they are going for construction of a second hospital now. Okay.
Very different kind of case study this is.
Yes, true.
Yes, sir. Thank you, sir.
Yeah. There is another borrower of mine who was manufacturing plastic bottles. So his business doubled, actually tripled. He got huge orders because people were wanting to buy these plastic bottles for those, what is that?
Sanitizers.
Sanitizers, yes.
Okay, sir.
That fellow did very well actually, he's very happy. Okay. Yeah, there are sad cases, there are profitable cases also, yeah.
Thank you, sir.
Thank you. So there are non-financial parameters also, like, what is the capability of promoter? Suppose he just a graduate who has come out of college and he wants to start a business. Of course, naturally, he may be having enthusiasm, but he doesn't have the experience. Integrity of promoters is very important. Just now, Mrs. Saujanya talked about, I think, Vijay Mallya like that. Integrity is very much important, okay? There are marks even for that. Then SWOT analysis, that is strengths, weaknesses, opportunities and threats, okay? Succession plans of the management. This is also very important. In one case, when I was in, a particular, I'll mention the city, Coimbatore, I was there, and it is a very big factory, spinning mill with 2 lakh spindles. But we said we will not give a loan to that company because There was an old man who was running the company, and he has only 2 sons. One son died in some accident, and another son doesn't take care of the business at all. He doesn't come to factory or he doesn't take care of business. So we said that there is no one to look after your company after you die, and he's already old, 80. So we said we will not give you any loan. So it all depends. You should have a proper succession plan. That means who is going to run your company just in case you become incapacitated. Okay, so you may.
Sir, one doubt.
Yeah. Yes.
Like you actually mentioned about that organization, where succession planning was not mentioned clearly. But I'm just curious to know, how did you know that this the younger one was not going to operate? Because obviously this boy will be the legal heir.
Yeah, because we do marketing for it now. We talk to the staff. We talk to the CFO, other people.
Okay, so that is how you got to know, right? Thank you, sir.
Yeah. When we go for unit inspection, we check a lot of things. It looks like the bank manager is just coming, walking along the shop or walking along the factory and going. It's not so simple. We watch a lot of things actually. How their notice board is mentioned, how their toilet is mentioned, or what are their, how actively their workers are working. And we also have some chat with the workers, okay? We talk to the workers. The owner of the factory will be trying to hide in case there are negative items. But the factory worker will tell you, he doesn't know. So he talks normally. In one case, I will give you an example. We went to some factory and he said, what work is there here? There is no material, I'm just sitting idle. That's how they talk. So immediately you know that there is some problem with the company, okay? And if some CFO has resigned recently, and if you have gone to some other good company, it's okay. If a CFO of the company has resigned, it is actually a bad signal. Because if some company is going bad, the first person to know is, apart from the owner, it is the CFO. That is the finance manager, the accounts manager. He is the first one to know apart from the owner. So if that, we will get information from those people also, either directly or indirectly. Okay. So there are various methods of knowing things.
Sir, one thing, like actually with your experience, I think you can tell me this. Sir, there has been a trend in the market that many of the Toyota dealers have actually left their dealerships. And there has been massive advertisement for new dealerships. Actually, what do you do? This was a trend few years back also. General Motors also announced that, they're taking back. So what is it that you do, sir, that time? Sir, am I audible?
No, we can hear you.
There is a break in your... can you repeat, please? No, there is some problem with me because I'm talking on the phone.
That all the Toyota dealers... Toyota dealers have left their dealerships and there was massive advertisement for East, West and Krishna district, sir. Okay. And a few years back also, General Motors did the same thing. They also called back and almost 150 plus dealers in India, they had to, leave their dealerships. Like if you have any automobile dealerships, what do you actually do with such kind of people? How do they repay? Because they'll be putting a lot of money in inventory and all, no?
Yes, correct. So there is something called supply chain financing. Many banks are having the scheme actually. So what happens is there is a three-way tie-up arrangement in most of these cases. That is a Toyota and the dealer and the bank. There is a three-way agreements actually. So whenever Toyota is supplying to the dealer, we know that 30 vehicles have come and the money is released. And as soon as the 30 vehicles are sold, the dealer gives back the money to the bank and banks gives back to the Toyota. Okay. So there is a three-way arrangement. Normally it works very well. Okay. There's not much of a problem. But of course, if there is a major, a strike kind of a thing by the dealers, yes, there is a problem.
Thanks, sir.
Yeah, thank you. Okay, so market share, competitiveness, loan disbursement schedules, all these things are non-financial parameters. Everything is taken into consideration. Then, of course, bankers will ask you for collateral security. There are primary and collateral security. Primary means the assets which you purchase with bank loan is called primary. For example, you are buying a land, that is a primary security. Machinery you are buying with bank's loan, that is a primary security. But collateral also they will ask you. maybe your personal land billing, etc., and your personal guarantees, okay? And of course, you have to do the valuation of the properties, and banks will also get the legal verification done by their own panel advocates. Valuation of the property also will be done by their own panel valuers. Okay, there will be some engineer guys. So,
They complaint the aspect security.
Sir, there seems to be a problem from your end. Your voice is breaking.
Oh, internet issue.
Might be.
yeah.
No. What is sometimes people are me what this Are you able to hear me now? No.
Yes, sir.
Now it is
Now
clear.
it is clear, sir.
Please continue.
Now it okay. Okay. If legal and bankers get quick judgments in their favor, maybe that's more. It's a If there are other questions, I would like to thank all of you. Your wonderful and interaction.
There are a few questions in the chat box, sir. If you could go through them and answer them. There is a question from JP Bharati ma'am. Banks are very careful with small customers. Why do big fraudsters escape always?
The common example in very prominently, as Santhosh also mentioned about Vijay. It's not that all big customers are also fraudsters or like that. Vijay's father was there, Vital Malia, and they have been doing business with the banks for a number of years, for decades. That they run a company called United Breweries, that is McDowell brand of liquor and all that. So borrowed money on them and the goods only. It is after they started the King's Airlines, they made losses. Of course, they made some fraud also, some diversion took place. But what I'm trying to say is, it's very difficult to judge people beforehand. After the event happens, you that yes, it's stolen some money. Okay? But otherwise, look at their track record, their father, their companies, McDonald's, United Breweries and all that. Everything excellent, right? So when we give loan, we think that it is good only. We roll wrong people. I'll give one big audible? Hello, I am audible, right?
Yes, sir, you are audible. But your voice is still breaking.
Why?
There might be an internet issue from your end.
Yeah, there might be some.
We can do one thing, sir. You can text
Hello?
the chat boxes.
Actually, this is also closed. I don't know how.
Okay. Right. Hafiz, sir, over to you.
I think sir is facing an internet issue again.
Yes.
Yeah, so if any other queries are there, you can just put it in the text box. We will forward to Sridhar sir.
Yeah, me now.
So already we are running out of time.
Okay, fine. All right. Right. Thanks, all of you.
Any other queries from the participants? If not, Hafiz sir, I think we can end the session here.
So let's close this session.
Yes.
So once again, we would like to thank Sridhar sir for your time. I hope all the participants are now clear about how to prepare their detailed project report. So now I request our CEO, Dr. Santhosh sir, to address the participants.
Yeah. So we are addressing, it's almost like having a one-to-one interaction session to find out your ideas. So as usual, we are doing every day. So any participants would like to present yourself? Yeah, last time we have interaction with Amia and also we had with Anantalakshmi madam and so Arifa Begum, are you there? Can you able to speak? Yesterday we had some glitches, so can you able to speak now?
Yeah, good afternoon, sir.
Yeah, good afternoon. Yeah.
Actually, yesterday what I was suggesting was that I am purely from the pharma background.
Right.
And my actually intention was to go for the preparation of a raw material from the laboratories because we are the pharmaceutical chemistry, no? So that was my actually intention, and I was wanted to have an idea about the MSMEs and what this entrepreneur and the incubation means. So that was the reason why I have opted for this course.
Yeah, that's good. And can I know your background and what you are doing?
Myself, I am a PhD in pharmaceutical chemistry.
Okay.
Yeah, and but what I felt from the interaction sessions that getting the life sciences, the funding for the life sciences is a lengthy process and it takes a lot of time for us for getting a successful product. And present with my idea, I am just planning for a collaboration with the other departments like the CSC departments. And my vision is to have some designing of a app which will be useful for the patient counseling. That is my idea.
Right, okay. So app development for what exactly?
App development for the patient counseling, sir. Actually, most of the people, they will be taking the medicines from the medical Apollo pharmacies or etc., which are genuine. And but they will not be having the proper idea regarding the utilization of the medicines. So if the app is developed and if the persons are being given this app, they will be having the counseling to the concerned family professionals or the pharmacy professionals.
Okay, fine.
So, yeah, fine. So that's good. And how many years of experience you are having right now?
I am purely from the teaching background. I have 15 years of experience.
Good.
But these days, what the glitches, what we are facing is that we need to go with the startups and everything. So this made me to have a driving force towards the multidisciplinary, highly collaborative work is essential. So that was the main reason for me to think in this area.
Right. So fine, that's good. So, so I will give you some suggestions.
Yes, sir.
Based upon what you have said. So
Yeah.
first thing is like, working in life sciences, nowadays it's more easy when compared to previous days.
Okay.
So second thing is like, we have tried to give you presentation in the sense of, in explaining you the things like we have platforms like incubators, business incubators to help you out for your ideas to develop into a venture.
Yes, sir.
So
Yeah.
now when we speak about pharmaceutical sciences or life sciences, see, we have come up with the business incubators to support them through a grant amount. Okay.
Okay.
Right now the big grant is open. The
Okay.
big grant is the one which will gives you clarity on your POC development with a grant of 50 lakh rupees.
Okay.
Okay. So here you get your complete assistance for your POC to develop, and the POC can be taken to a business immediately.
Mhm.
Okay. So there are about 9 grants available under BARAC. Okay.
Fine.
So 9 schemes are there.
Yeah.
So you can apply and you can, move ahead with your startup company, whatever the stage you are in. Suppose
Yes.
if you have any intermediate molecule or any chemical moiety which you have developed, so we can take that into the business immediately. So there are ways how we can do. Now, suppose say recently we had COVID, and we have seen how vaccine have been developed within a span of 6 months to 1 year, and in 1.5 years we have nearly some 10 companies, with the vaccines developed across the world, right?
Yes.
You agree?
Yeah.
So now generally vaccine development takes about 10 to 15 years.
Yes.
General.
Yeah.
But we have the modalities, we have the technologies where within a short time we came up with the vaccines into the limelight. So COVID is the one which is the best example for that. Okay.
Yeah.
Yeah. So now what I am trying to say is, in life sciences now, with the advent of business incubators and certain grants, it has become easy to start on your own, and also support is very much there, and one can easily come up with a startup company. Just you have your idea, and whatever it is, don't think about it may take a long time and all. Now it's a very short time one can develop into a company. We have many examples like that. Even we have our in-house startups, and if you have attended our impact lecture series yesterday morning.
Yesterday morning I have attended, sir, where I have seen that the natural products, what you are doing.
Exactly.
The same path is what I follow for the synthetic products.
Yeah, that's what. Even
yeah, so I felt almost all very close to the reality of my idea. But again, when I asked the doubt that what was the process, how you were able to get to that particular success, means sir has told me that they have gone for the registrations with their.
Yes, that's what.
Yes,
so now here we are to serve you, and here we are to guide you as an incubator. If you have any of your licenses idea, which may be any kind of technology, deep technology, we are here to take it further. Okay, we can able to support you, and that's what we can say. Secondly, as you told, app development.
Yeah.
So for the app development, when you want to do patients counseling, so that will act as just an incremental, the innovation and an add-on value to the existing business.
Yeah.
So you have to actually work out on more on the problem statement,
So it is a very nascent stage, your idea, that is right there. But of course, like it's a good idea, first thing, but you need a more mentoring, more support.
Yeah.
So we can able to take up that idea also. Please put forward these two ideas if you have.
Yeah.
Like one is related to pharmaceutical sciences and other one is your own app development with the patients counseling. Of course, in fact, you need more inputs for that. Not just, patient counseling, but still some more we can add for that. What is that we can add? We will take those sessions to you in our pre-incubation program. Okay. We have our technical mentors. We have a good networking support in the form of business, marketing, and technology development. We can do that. Okay.
Yeah.
Yeah. So please, share your idea in a summary and submit to us. So on the last day after tomorrow, we will declare all your ideas and we will take it forward. Okay.
Yeah.
Yeah. Right. Thank you very much.
Thank you.
Yeah. Thank you, ma'am.
Sir,
anybody
in
else?
this regard, I wanted to tell you one thing. Badrika student, one student has developed an app in startup Good Minds, and she got registered. Same, all the type of services, whatever we require, we need to just go to that app, and just if we click it, they will give the specialized consultancy, connectivity with the doctors, or any type of such type of services.
Right. Good. That's good. So that's what
She's only degree second year. This is studying degree second year. She registered her. I think from Usmania University also she has reached. That day Badrika principal is telling, and she was known to me.
Okay.
She has given a lecture, sir. You are attending, I think. You are there at the time she was giving lecture, startup student.
Right. I was not there on that day. I was in another meeting, I guess. So that's one thing. Secondly, of course, we have ideas like that. We have in health tech, we have many such business models in that way. But actually, each and every business model differ in the sense of their particular, the USP. Okay.
Yes,
so unique selling proposition is the one which it defines. So other thing is it depends upon the entrepreneur, the serious entrepreneur who will take it forward. Okay. And the third thing is the support, how they can utilize. See, there are about support systems available. We have grants, we have schemes, we have incubation centers, but how much you will take the advantage and explore them and utilize them and move forward. It depends upon you completely, and the success depends upon itself only. So that's how one will become a successful venture. So business.
Sir, morning when I'm just going to a tiffin center, there because the government is insisting not to use covers. But it is very difficult for the small vendors to provide them with plastic this thing because cost is more.
Yeah.
So why can't nowadays it's coming in ice cream centers and all plastic containers. But I had a morning. Why can't we produce certain type of paper container which cost very less.
Yeah.
Unused waste papers. All the colleges and all waste papers after 5 years they will be dumping.
Right.
I shared the other day Hafiz sir converting of waste into some other paper actually. But today morning I thought instead of that it may be big procedure, but it will be useful for the society.
It can be done. See, we have people who are of course, in fact. If you want to do, you can also take up that. It requires the complete waste paper. You have to just collate it, and then you have to de-ink that if it is having an ink matter, and then further, there are certain machines we have grinding machine, we have mixing machine, blending machine. So they have, so you can employ those machines. They cost only just 25,000 to 50,000 with 50 kg to 100 kg capacity. And after that, you have to just use the hydration machine, electric dryer machines.
Yeah,
And then
yeah.
you can use the press machines. Okay. And then
I
you
visited
have an molding
NIRD,
machine.
sir, but it was very big missions. I thought it is not possible.
No.
But you are telling
It's
very,
possible.
very reasonable
It's
cost.
possible, ma'am. It's possible. You require only 500 square feet of area, and these machines can accommodate within that area. And and it takes only 2 HP of motor, and you may get only a power of 1,000 to 1,500 rupees per month. That's all. So it's a very micro industry. You can take up that. So if you want, I can connect you. I know 3-4 industries, 3-4 such industries where I have handholded them and produced several products through their assistance and of course like mentoring them. So
yeah,
I can able to connect you well. If you are interested, definitely we can take up that.
Yes.
So,
we can guide some of the friends of the students to start ventures, entrepreneurship and.
Sure, definitely. So we'll be there to help you out.
Sir,
That's what my meaning is. So now it's all depends upon how seriously you take up any project. You have to just it is. My statement is to all the participants. You just think of about one venture and focus on one venture and take up that. So we have the support system. We can able to take up that forward. Any technology, any idea is enough. Stick to one, take up that one seriously, and there are a lot of ways to to reach the market. There are a lot of ways, go to market strategies, and so that's how we can able to take up you further. Yeah. So any other person want to discuss about?
Thank you, sir. Thank you. Nice suggestion you are given. Thank you.
Thank you, madam. Thank you. Yeah. So any other person?
Sir, this is Dr. Durga Prasad.
Yes, sir. Please.
Yes, sir. I am a dentist. So I was working as an associate professor. I have 14 years of experience in dental teaching and clinical practice, sir.
Nice.
Sir, recently I have had a small team which we are working on NLP to come up with electronic data management system that we are working on it, sir.
Okay.
So, and that is an idea what we looked at to break the barrier, how the clinician can overcome the recording and typing, to overcome the typing of the case histories, sir, by using NLP as a model. So recently I have gone through a short course on data science, machine learning and AI. But after attending the course, I felt like maybe my field skills are good, but the technical aspect and the coding and those things I was not very comfortable. So recently I met with a friend